Well, Leslie, we have another IPO being announced in the tech world. This time it's GoDaddy, based in the US. For those of us who aren't from the US, tell us what the company does.
Well, basically, GoDaddy sells domain names. So if you wanted to buy your own website, or if you were a small business and you didn't really have an IT person wanted to set something up, you could buy your domain name, and they also provide the web hosting service for your website. So selling domain names is about 60% of their business, and they are the largest domain name holder currently in the world.
So it doesn't sound like it's exactly the cutting edge of internet technology. Domain names obviously been around for a long time. How long's GoDaddy been operating, and is it profitable?
It is not profitable. It was founded in 1997, or under a different name in 1997, but it has not really figured out the business model that will allow it to generate profits. Right now, they're doing about over $1 billion a year in revenues, mostly from domain name sales, but they're running about $200 million a year in losses. They have been narrowing the losses, but they, really haven't quite turned it around yet.
So quite an old business, certainly in internet terms, and still a loss-making one. What's the investment proposition? If you buy shares in this, what exactly would you be getting?
Well, it is it's a low-margin business. It's a very competitive business because if you're buying a domain name, customers have a lot of different options for who they can choose. I guess the advantage that GoDaddy has is that they have a large customer base. I think it's 12 million customers, and they have pretty high customer retention rates, and so that's an asset. But in terms of signing up new customers, it's a very, very low margin business. It's very competitive. GoDaddy spends lots of money on advertising, most famous for their racy Super Bowl ads, but they will have to continue to spend and invest in marketing to maintain that sort of market share.
Sounds like it's a tough business. Now, we've been here before with GoDaddy. They tried to float in 2006. What happened that time?
They basically just couldn't get the valuation that they wanted in 2006 and pulled the offering. The company sort of, continued to operate for a couple more years, and in 2011, KKR and some other private equity groups took a majority stake in it. One thing that's interesting about this listing is that when GoDaddy goes public, its founder, Bob Parsons, will actually leave the company. He'll still be on the board, but he won't have an operational role. So we will see perhaps a bit of a shift in vision with his departure.
That might help on the road to profitability, but it sounds like it's a sort of fairly low-margin, old-style tech offering coming to the markets now. Leslie, thanks very much.
Thanks, Oliver.